Good morning, everyone. First of all, I'd like to thank the Korea Economic Daily for inviting us to this forum and to congratulate them on their happy occasion. Ladies and gentlemen, we've had a very interesting morning. We've listened to Professor Guy Sorman give a very interesting insight into Korea and some proposals for Korea to consider. We've had Professor Raghuram Rajan look at it from the global perspective, the underlying structural issues that we have to worry about, think about as we think about the trajectory of the global economy going forward. And we've just heard Professor Fan Gang give a view, a very insightful view on not just China's immediate prospects, but also some of the structural issues that China faces and which impacts the global economy. We also have a lot of issues that we face in the global economy that we have not fully covered yet. And I'd like to use the next roughly 40 minutes, try and elicit from the panelists their view on some of the key questions that we face in the global economy. We are meeting at a time of great change and great risk in the global economy, with many things that still remain fairly uncertain and difficult to really understand. Clearly, with the fading away of the fiscal stimulus, as Professor Rajan pointed out, it is not clear what economic engines will come in to replace those policy-induced drivers and what really is the nature of the risks for the global economy in the next couple of years. We have a China that is going through important structural changes, and we also are not quite clear what these changes mean for China and for the rest of this world. So let's try and address some of these questions in the next 40 minutes. What I'd like to do first is to go to Professor Sung, whom you have not heard speak yet. He has done some very interesting and innovative work on the corporate sector and its implications for policy. So, Professor Sung, can I ask you first for your perspective on some of these issues and any comments and questions you might have?
So, I'd like to give some questions for some presentations. The first one is for Professor Fan Gang, and another one is for Professor Rajan. The first question is as follows. You mentioned there is Chinese government has already tried to cool down the Chinese economy. That is a pretty important point. That because if Chinese government has implemented that kind of policy, then even though we are observing some decrease in economic growth rate in China or the other decrease in other economic indicators, that would be fine because we can predict the soft landing. But the issue is that you mentioned there was some policy of cooling down Chinese economy in types of the fiscal policy and monetary policy. But my question is that if we see the fiscal position in Chinese government, as in your presentation, but there would be no big change in fiscal position before the crisis, I guess, because they are maintaining pretty stable government saving, right? So in that sense, how they have implement that kind of policy in terms of fiscal policy. And another question is also related to that question. That is if Chinese government has implemented this monetary policy before, I mean, in some sense, the contraction, I would say contractionary, before the crisis, then as long as we know that there was no big change in exchange rate, and how they could implement the monetary policy without having a big change in exchange rate. So there might be some changes in fiscal position or the monetary position, but if the magnitude of those policies were not sufficient to overcome that issue, that might be still might we have some problems. So.
Well, thank you for the question. For the fiscal policies, I think the main part is not immediately reduce the central government spending. The project is still there. The major operation is try to maintain the management of the local government spending.
Okay.
and the local government borrowing, which would be dangerous if it go too much. And it's a combined the the financial operations regulations and the fiscal operations. So that's one thing. And we do see some local government spending is slowing down, and some project is slowing down. And for the monetary policy, yes, as you said, I do not expect the huge exchange rate adjustment, a quick adjustment. It will gradual, and even the gradual, since last time, think about last time, from 2005 to 2008, 22% of appreciation occurred. So that's quite a remark, quite large. But anyway, it's a gradual. From that point of view, you have to have more quantitative management rather than the rate management.
Okay.
So you may directly control the deposit requirement ratio, and also put some control on the lending behavior itself. So from that kind of, by that kind of the quantitative, direct or quantitative management, you keep the liquidity.
So you are saying that rather than directly controlling the interest rate, you are doing some other measures.
You got to.
So I have another question that's for Professor Razdan. So you mentioned the issue of ownership society in the U.S. and to support the ownership society, the government-sponsored financial institutions like the Fannie Mae, or they have provided some financial support for the home buyers. So do you think there is alternative way of the home ownership society, or you think there are just more policy measure to take care of that kind of issue? So because if you know that there is the ideology of home owners society, then we should provide some financial support for the people who are in need, who really need to buy the houses.
I think in the United States, you will probably have a serious rethinking of this idea of the home as part of the American dream. In fact, what you see right now is mobility is being reduced tremendously in the United States because people are tied to their homes, they can't sell it. And as a result, the famed flexible labor market in the US is being hampered by the fact that the mobility is hurt because of the home. I think the broader point that I was trying to make is most people think that structural adjustment is needed for emerging markets, not for the industrial countries. And I think the United States has been postponing a very serious structural adjustment. We were having a discussion at our table before the speeches started, which is the fact that increasingly its labor force is not equipped to deal with both technology that has been improving over the last so many years. There was an article in the New York Times the other day about the factories not being able to find workers for the kind of sophisticated equipment that they now have because these workers aren't trained up to work with that kind of equipment. And the second is that they're not equipped to compete with the changes in the emerging world. So the unskilled labor and unskilled jobs are probably going to be much more limited and limited to service sector jobs in the US than in the past. Which means if the US wants to compete, it needs more knowledge economy workers. And it needs to create the kind of training which it hasn't been doing. And I think these stopgap measures like extremely easy credit, housing credit, those are just papering over the underlying problem that the US is actually an extremely unbalanced economy now and has to make those changes. And again, all the discussion right now is about getting back to where we were in 2008, which is still an unbalanced economy. And I worry about that.
I'd like to just follow up on that. It strikes me, if you look at the discussions that we've had this morning and just now, that some of the key structural adjustments needed to restore balance in the global economy are just not happening. Professor Fan Gang explained to us how difficult it would be to change the savings structure in China. We are looking at the need for currency realignments, but these have not really happened in the manner needed. The renminbi cannot appreciate too fast against the US dollar, And the US dollar perversely has actually appreciated rather than depreciated. We are also seeing it as quite difficult to engender the kind of structural adjustments needed not just in the US labor market, but even in terms of the welfare state reforms in Europe. So given this rather bleak outlook, am I being too pessimistic in saying that without these adjustments being made, are we in for another crisis? Or some downside that's quite serious? First Professor Rajan and then the rest.
I think these structural imbalances are going to take a fair amount of time to go away. And I don't think any country short of crisis is going to take the medicine before it needs to. I mean, it's painful. It's painful for the US to make these changes and very difficult. Everybody talks about improving education and so on, but the administration finds it hard to devote enough resources to that process. Europe welfare state change is not going to happen on a dime, and Professor Sorman can talk about that. And of course, China's pattern of growth. Why fix what ain't broke? It's going to be harder. And I know there are voices in China talking about the need to change, but there are lots of voices saying status quo is pretty good. Why modify that tremendously? So I think across the world, the appetite for change, and I'm sure the same forces play out in South Korea also, the forces that are for change are quite weak. And especially in a time of weakness like this, there are lots of people who are saying, let's get back to normalcy and then figure out how we change. But if you don't make the change in times of stress, it's very hard to make change in times of normalcy. Will this lead us to the next crisis? In my view, hopefully not. We've learned some of the lessons from the financial crisis. You need a pretty unstable financial system also to help create the kinds of problems we had. But I do think we won't have a stable global economy until we deal with this. Where is the hope? The hope is in what Professor Fan Gang mentioned, the shift in demand to the emerging markets will create countries that are able to absorb exports from the rest of the world to a greater extent than we have right now. That will create a more stable sort of pattern of trade, provided no emerging market goes overboard and starts running large deficits. But at the same time, that will provide the growth that allowed the adjustment that industrial countries have to make. That's sort of the rosy scenario. Hopefully we will get there, but there are lots of problems on the way.
Right, thank you. Can I turn to Professor Guy Sorman and then the others as well?
Yes, I'd like to react to some of the concepts that we are using in this discussion. In your introduction, you were wondering what will be the engine of growth if a state stopped their stimulus policy. But as far as I know, the engine of growth in the history of economy is not the state, it's entrepreneurship and innovation. So I think there is a kind of a biased view, and I completely differ with Professor Fan Gang when he says that he hopes that he will live in a Keynesian world. I don't know what you mean by Keynesian world, but it's a metaphor, I suppose. But of course, we need a state. I don't deny that. I'm not a libertarian. But the role of the state is to build the rule of the game, the framework. But let's never forget that the engine of innovation is not public stimulus. The engine of innovation is always innovation, always technical innovation, always scientific innovation, always entrepreneurship. And so in this debate, when we put first in public stimulus, we really forget where does development comes from. And Professor Fan Gang reminded us that in the past, when China relied so much on the state, that you had a stable society but zero growth. And let's not go back to this time. So I hope I will never live in the Keynesian world. But, well, as a metaphor. Second, you all talk about adjustment, and I completely agree that this notion of adjustment does apply to a developed country as much or even sometimes more than to emerging nations. And I mentioned, and again, it's been mentioned, major reforms in the United States. Certainly, education is a key reform, and in Western Europe, I would also say education and welfare. And we have created in Western Europe, when the situation was very good, we have created wonderful healthcare, wonderful pension system. We can't afford that anymore. And will we be able to reform? I'm not sure. And we say, well, it's a long process. Maybe we will never able to do it. What I mean by that is that we are talking about crisis as if crises were exceptional. If we look at the history of the world, I mean, you have crises which go on for 100 years. So crisis may be a normal situation for many countries. And in the case of Europe, I think that crisis will be the permanent situation in Europe, and we'll have to live with crisis. I mean, I don't know what is normalcy. Somebody who said you said normalcy, no? I don't know what is normalcy. I don't know what is crisis. I think crisis may be normal. And we all heard about the new Professor Rogoff's book about crisis since 800th century, showing that crisis and bank crisis and state failure is something which is normal. I mean, so maybe we have to forget about this notion of crisis and normalcy. And final remark, and sorry if I repeat myself, I mean, we shouldn't talk about economics as if it was isolated from the rest. And Professor Van Gang just before mentioned the risk of social unrest. I mean, we can't think about economics, be it the desire of the American to have their home, or the Chinese people desire to live better, or desire for a more equal society. I mean, all this is as important as economic policy. Economy is only one part of the life in society. It cannot be disconnected from the rest. And sometime in our talk, because we are economists, we speak and we think as if economics was a science above the society. No, it's part of the society, and we are impacted by other desires.
Thank you. I'd like to ask Professor Van Gang to reply to that, and also perhaps Professor Soong after that.
Well, for a developing country like China, if now we have a big crisis, we may crash out. That's my word I use. And think about some Latin American countries. For 40 years, stagnated. And think about some Asian countries. After the Asia crisis, Indonesia stopped for 10 years. And that kind of social pain was really, so that's what I mean. We may try to avoid those kind of things. No one can smooth out without any upside downs, and you can talk a crisis or slow down. But big crisis, how we can prevent the big crisis. I think that all the economics since modern economics since 1930s are very much to deal with these fluctuations and the upside downs, how to prevent the big ones. So that's why I came up with the word that the so-called the Keynesian word. You keep the macro innovative companies and the people, the free pricing, free competition, but we need some kind of a management, particularly to manage the boom. Not only to manage the bust, but manage the boom, and to prevent the consequences. So it's not talking about keep the big government, but definitely we need macroeconomic policies. Actually, the Keynesian word is contradicted to the Karl Marx word. That's a planning, that's state ownership. But we're trying to push the privatization and the market competition. But for a country like this, big, complex, and very easy to get it. Think about even the last year, the housing market is crazy. It's really become crazy. Now people say there's the housing now, the empty in the dark can house 200 million people. So that kind of the overcapacity, you need to think, that kind of speculations of the investment, that's something you really want to prevent it. How to prevent it? We are latecomers. We have all the lessons from European in the early last century and the century before, and we have lessons from recent Asia crisis and then now the recent American financial crisis. So we should take all those lessons.
Thank you, Professor Sun.
As for your question whether the crisis itself is inherent in the economic system, actually, I would like to define the current, including current crisis as a crisis of debt, because the reason recently we have this kind of crisis is that we have maintained too low interest rate for a long time. After we have the IT bubble collapse, or before that crisis, we also have the similar situation also. And I also would like to define it as a crisis of debt in government, like the European countries, including Greece or other PIGS countries. So that is pretty much related to, as you just mentioned, the welfare state and the fiscal mismanagement. So as for the question whether the crisis is inherent, that I'd like to say that if we are destined not to manage the financial institutions, the debt behavior, lending behavior, or we cannot manage the political interest on creating debt, we are destined to have the crisis. But we are able to manage debt, corporation debt or the fiscal debt, then we can be free from, or at least we can reduce the magnitude of crisis. That would be my comment.
Thank you. I'd like to pick up on this issue of whether crises are inherent in the system. It really strikes me how in the last decade we have, in the global economy, witnessed an IT bust, and then more recently this financial crisis. And between that, we've had several emerging market problems as well. Is there something in the nature of the globalized economy, particularly the role of finance, that almost makes it certain that there will be crisis from time to time? Let me be a bit more specific in one aspect, and that is global monetary policy. We have a situation where the Federal Reserve pursues policies that it thinks is optimal for the United States. We have other countries, China for instance, or the Europeans, who follow exchange rate policies that are optimal for itself. But the net effect is that the outcome is suboptimal for everyone, and there seems to be a failure of coordination. And I'd like to start with Professor Rajan first. Do you think that this is really something to worry about, this incompatible policy interests, or is there some way out of it?
Well, there are two aspects here, right? One is the incompatible policies. People are looking narrowly at their own domestic situation and setting policies appropriately. And unfortunately, organizations like the fund historically have been focused on things like exchange rates as the primary factor that affects policies across countries. But we're increasingly seeing monetary policy is a big factor, and we don't treat it as part of the international policy debate. Are you allowed to have a monetary policy which is primarily domestic focused when it creates imbalances in the rest of the world? I think we need to start discussing that more than we do today. But I also think that what we're seeing is a indictment of the global private financial system, because it doesn't seem to be able to cope with large amounts of cross-border flows. It goes from boom to bust there. And we need to ask why that happens. I mean, why did, for example, foreign investors finance so much of East Asia's investment only to pull back at sort of the first sign of trouble? And similarly, what happened in Iceland, what happened in East Europe, these are situations where it seems to me that large-scale foreign borrowing seems to be unstable. Whether I thought it was a problem only with underdeveloped financial systems. And what we see with this recent crisis is the problem also of developed financial systems. There's something in foreign borrowing, whether it's the foreigner who's less willing to apply standard credit analysis methods and tends to rely more on the government, or something else, which tends to make a lot of foreign inflows problematic for domestic expansion. And if you see a country growing on the basis of large foreign financing, typically, not always, it's heading for trouble. Why is that? Why is why is international capital flows not able to support the kind of imbalances that we think, should be financeable?
Thank you. Could I ask Professor Fan Gang, we had a recent discussion where you mentioned that the US has an outsized impact on the rest of the world, but the rest of the world's global citizens have no say in determining what the US does. Could you expand on your concerns in that respect?
Well, I still think that we should think of this imbalance, global imbalance, from perspective of domestic reasons, domestic roots. I agree that there is some domestic problems on the developing country side, but I would say U.S. domestic situation is important factor. And how to increase their saving, how to reduce the deficit is important to reduce the deficit reduce the deficit on the equation, the deficit side. Also, another factor we haven't mentioned very much, the dollar position. The dollar is important. It's a global currency and is still used as a global anchor for the global currency system. And that's okay. We need a global currency for the convenience of transaction and reserves and all those things. And the U.S. is vulnerable as well because it takes responsibility for the others. But that's really as a side product or as a reason to give the U.S. the sense of less risk, less financial risk than anybody else. Because U.S. can just print the money and repay the debt. And that's why when the crisis broke up, people even go to dollar assets more than before because it's seems more safe than other currencies and other assets. So this is a problem of a global financial system, global monetary system. So we have to keep thinking of that. Maybe there's no short solution, and we cannot fix that very quick, but we should keep, the eyes on that issue. And that means U.S. as a leader of the world and as a provider of these public goods does bear some public responsibilities, and how to fit that into the G20 framework or the global governance framework is important. Although I cannot provide a short solution because no short substitute for that. But we should think about, when we think about reform of global governance, we need to think about that issue as well.
Thank you. Professor Sorman, I think you have some points here.
Yeah, very shortly, of course, the destiny of the US dollar is quite fascinating because when things go well, people buy dollars, and when things go bad, they still buy US dollars. But should we criticize the United States for that? We must wonder why people feel that the safest investment is US dollars. And as you know, being French and having been and still being a great supporter of the euro, we hope that by creating a European currency, we could balance the influence of the US dollar. We have not been able to do that so far. So it's not that easy to find a substitute to the US dollar. And maybe we have not thought sufficiently the reason why people are that much attracted to the US dollar. There are no fools, so there must be some deep reason, and we guess what they are. And neither China nor Europe so far have been able to offer an alternative to that. A second observation very rapidly, in your initial question, you wondered if globalization was accelerating the rhythm of crisis. I mean, the more globalization, the more crisis. And I think this is a very good observation. I don't see how we can go against that, but I would say that globalization certainly creates more crisis or more opportunities for crisis and more risk, but also more opportunities. You know, one of the marvel of globalization, and certainly Professor Van Gang wouldn't deny that, it's thanks to globalization, very poor countries were able to grow. And the drama of the poorest country today in the world, and we think of the Middle East, we think of Africa, they are very poor because they are not globalized. So when we do this criticism, I mean, I would connect the US dollar and globalization. It's so easy to make criticism. What are the alternatives? So far, there are more benefits to globalization than there are risks which are involved.
Thank you. We will have the last 10 minutes for questions from the floor. And in the meantime, while you're preparing your questions, I want to turn to Professor Sung and pick up on this notion of this propensity for crisis. Korea has actually managed its economy really well during this last 2 years, even though it had vulnerabilities, for instance, on the external debt issue. What would you say are the lessons that other medium-sized economies can learn from Korea's experience? And I'd like to specifically ask you about the recent trend in some countries, including Korea, to think about the use of capital controls.
Okay, so I'd like to say the first two things as a general issue. That is, in the case of Korea, has maintained a fiscal position pretty good, in the sense that before the 1997 crisis, we had maintained a balanced budget for a long time. So after the 1997 crisis, we could increase the government expenditure, including the funding injection in financial institutions, which is pretty similar to what is going on nowadays in European countries or the US. The reason why we could do it is pretty much related to the soundness of fiscal position. And that is the one thing. And we are still maintaining to that issue. And another thing is as I just mentioned, the debt control issue. Before the crisis, the Korean government has implemented some regulations, which is not exactly related to interest rate as a price value, but that was pretty much related to indirect measures on lending behavior, like the debt based on income or the debt based on the house value or something like that. So that was pretty much helpful to dampen the external shocks, the impact on Korean economy. So that is the basic, they are pretty much the basic issues in Korean economy. And there is another issue pretty much related to open economy. In the case of the small economy or medium-sized economy, as you just mentioned, to have the economic growth, it is pretty much necessary to have the globalization or to have the openness of the economy. But the problem is that the kind of economy might have some vulnerability to external shocks. We had that problem also in the crisis. So even though we have maintained those soundness of the economy, we have some shocks from the external economies, like Europe and the US. That was pretty much related to foreign lending and foreign borrowings, as Professor Rajan indicated. Actually, that was pretty much related. So in that sense, recently we have, like the other countries, including Korea, small and medium-sized countries might have the issue of increasing the soundness of fiscal institutions. You just mentioned the capital control, but I don't like that kind of terminology. Actually, that is not about the control itself. That is about increasing the soundness of financial institutions in terms of controlling the short-term debt. Especially when we have the globalization, we can find many sources which have the low cost in other countries. But problem is that if they have their low cost, then I guess if there are other shocks in other countries, those bonds would flow out from the Korean economy, and then they might create some shocks to Korean economy. I don't say we should have the closed economy or something like that, but we need some optimal level of the controlling or measurement of the kind of risk. That might be a lesson for the Korean economy or other the small and medium-sized economy. I mean, it is now pretty much related to large economies, I guess, because they have their own pretty big internal market. But in the case of the small and medium-sized economies.
Thank you very much. May I now open the discussion to the floor? If there are any questions from the audience, I'd be very happy to take them. I see a hand up there. Yes? Thank you.
There's been a lot of discussion about the crises in the abstract. But if, in fact, there aren't adjustments made, which it seems quite likely that they won't be made, and that the level of debt rises considerably in the United States over the next decade, and there aren't real adjustments, things are sort of papered over, what will the crisis look like at that point? Just as in Europe, where it's easy to sort of cover what's happened in Greece and Ireland and Iceland a little bit, but it becomes more difficult when Spain and Italy and other countries become involved. What is the nature of that crisis, you think? How would you protect yourself from it? And do you think it's close to inevitable? It's just a matter of timing.
Maybe we'll take one more question from the floor and then we get the panelists. Yes, I see a hand there, the lady there.
Yeah, thank you. Thank you for your very good speech. Actually, I'm from China. My name is Wang Yisi, so I'm very glad to see our Professor Fan here. It's really great you answer some questions for the Chinese concerns. I have a question for Professor Salman. It's about the tourist safety in Europe. We know from long time ago, it's people like to go to Europe for travel. But in our concern, Europe as developed countries, there the safety of the tourists is a big problem. I know so many examples people are losing everything. The passport, the money. So my concern is about what's this safety with happen in the developed countries there, and what will be the best measures to improve this situation? Thank you.
Sorry, could you repeat the question because we didn't quite understand? Safety for, referring safety for tourists? Okay, so the sort of criminal kind of thing. Okay, thank you.
Difficulties for tourists.
Yeah. Well, Europe has been very often criticized for the difficulty of getting a visa, and for tourists and for business people. And but Europe as a whole is trying to improve this situation, and there are special visa for business people, not for tourists, and also to facilitate the life of business people wanting to travel into Europe. You know that you can get a Schengen visa, I mean a visa which is valid for all of Europe. And if there is no French embassy representative here, I will tell that the best way is not to go and ask for a French visa. There are some countries where it's easier to get in, like Greece, for example. And when you have a Greek visa from Greece, you can travel all around. We hear this complaint very often, but I promise that much efforts have been done. And also visa application will be progressively suppressed for many Asian countries. I mean, this morning, for example, it has been announced that the Taiwanese citizen will not need a visa anymore to get into Europe. Now, the other question is related to safety. I don't think, well, it's all over the world. And of course, I mean, the tourists are confronted sometimes to swindlers and violence, but I think Europe is not different. You have to follow certain rules. There are parts of Paris where you better not go past midnight. I mean, just be informed. But I don't think that Europe is more dangerous than any other countries. And I hope next time you come to Paris, you still feel safe. And if I may also take the opportunity to answer very shortly to the debt question. It was mostly directed vis-à-vis the United States, maybe more than in Europe. But in Europe, the debt situation is very serious, and not only in Greece. I mean, I recently wrote a column explaining that we are all Greeks when we are Europeans to a certain degree, and we are all confronted to the same situation. It won't be easy, and to be honest, I think that certain countries in Europe, starting with Greece, will not be able to repay their debt. They won't be. And so there are methods which are elegantly called restructuring the debt, which is in fact transferring the debt to the poor people we were stupid enough to lend money to Greece. And I don't see any possibility for Greece and maybe for other European countries that restructuring the debt. I hope we will do it in a better way than Argentina, but eventually it is the same technique, and we won't avoid that.
Thank you. Could I ask the other members of the panel to address the question on debt and the likelihood of crisis, starting with Professor Rajan?
On the U.S. and what will happen. I mean, the U.S. has one difference from Europe, which is the, amongst others, which is that the size of government is still relatively limited. Just a number, 35% of GDP is probably accounted for by the government relative to 50-55 in some countries in Europe. So if there is political will in the United States, I think the unfunded liabilities, Social Security, health care, plus also public debt, and the contingent liabilities that are probably going to come over the years to come, can be managed. But of course, that is if there is political will. My worry about the United States is not so much economic capacity, however you might want to define it, but how soon they can get the political capacity to act, and there, unfortunately, the news is not good. The Republicans aren't talking to the Democrats. They're trying to seize every advantage they can, and that, to my mind, is more reflexive of what we used to think of as developing country rather than industrial country. The politics aren't stable in the United States, and maybe as Churchill said, we'll try a whole lot of things in the United States and finally they'll come to the right solution. The United States has had in the past a capacity to do that, but certainly I would say that's the big question. What form it will take, I think we're far enough away from that. I think the US still has substantial capacity that it's unclear what form it will take. I would hope over the next few years there's a realization that we need to make fiscal adjustments, and those adjustments will take place primarily in healthcare and how to keep the costs limited, which this healthcare bill didn't do. I think we need to figure that out. But if that doesn't work out, if there's more conflict, it's very hard to predict how that will evolve.
Professor Sung, and then Professor Fangan.
Okay. So the Professor mentioned the difference between European countries and the US. I also write another difference in that issue between the European countries and US. That is, in Europe, there are some countries which are experiencing the debt crisis, and a problem is that those countries do not have their own currencies. So that is I guess that is a big issue, because when we have some problem of that issue, one way to avoid that issue is that to have the limited expenditures, or in other words, we become poor by having less expenditures, because the basic problem of that is based on the fact that we have consumed or invested more than what we have saved. So in that sense, how we can get out of that crisis, the one way is the devaluating or depreciating their currencies by having the smaller value of that. But the problem of those countries, they cannot have that kind of policy or they cannot implement that kind of measures. So in that sense, they should really reduce their real wages. So in the case of the welfare state, that would be pretty much related to the social security support. But a problem is that is politically pretty much painful. So in that sense, it is very hard to, I guess, overcome that kind of problem, I guess. But in the case of the U.S., of course, nowadays the U.S. currency is pretty much strong, but U.S. has its own currency. Anyway, if we have some depreciation of the U.S. currency, that might create another problem. But in the case of that problem, the U.S. can, in some sense, avoid too severe problem, I guess. If we go back to the experience of Mexico, in the case of the tequila crisis, the reason the Mexico was really in a deep trouble is pretty much, I guess, is pretty much related to the type of debt, the government debt that was issued by the Mexican government. At the time, before the crisis, Mexican government has issued the bonds, which is pretty much indexed U.S. dollars, not by the pesos. So in that sense, they could not reduce the value of debt. So anyway, they should pay back in terms of dollars. But the dollar, when they are in problem, when they are in crisis, the value of dollar would go up, and the value of the peso would go down. So in that sense, the burden of debt has been increased. So in that sense, there is another difference between U.S. case and European case, I guess.
Actually, I don't think we will have another so-called second crisis. I rather think maybe the situation, if this continued, situation would like Japan, long-term stagnations. Because if you want to have, the crisis need a huge uncertainty. When you have that's what the case of United States in the 2007 and 8, that the derivatives. You have a huge bubble there, then the bust, then the panic, then all the crisis. But now you do see the problems, where the debt is, and how much Europeans debt, foreign, American debt. You see that. You don't have a big uncertainty, but you need a long time to deal with it. That's a so-called the balance sheet problems. How to get out? I think two factors are really important. One is innovation, technology. If we have something like, IT revolution, you get out that kind of situation. And secondly is a political will, how that can really do the reform. But even you have reform, you take years to finish. From that point of view, I would say U.S. may have more technology innovation. And actually, Europeans now have more political will. I do see the very fast move on the politicians to try to fix the fiscal discipline issue and the rescue mechanism issues. But I do see we may have a kind of a long time problem. Not necessarily 10 years, 15 years, but 5 years, 7 years, that's very likely to have that kind of stagnation.
Thank you. We are coming to the end of our session, so I'd like to end on a slightly more positive note. Professor Guy Sorman made a very interesting point that actually with all this discussion of crisis and all the negatives and all that, the fact is that globalization has been a tremendous positive, and that all these underlying structural drivers of growth, the supply side, which are much more important. And I can think of several very positive drivers of growth. You have supply side forces in China, India, Brazil, Turkey, all these large developing countries that have been unleashed and I think are unstoppable. You have urbanization now accelerating, which requires tremendous investment, which will be a source of growth. And we have lots of new technologies, for instance, some in which Korea has benefited tremendously in consumer electronics, the Apple and so on. But the question I have in mind is really, will these positives be enough to offset some of the negative factors that we have discussed? And I'd like to ask the panel to round off this discussion with very quick comments on this question that I've posed, starting with Professor Guy Sorman, and then Professor Rajan, Van Gang, and Professor Sung.
we are entering now in the field of belief and prophecies. So, very rapidly, when I reached the age of 50, I thought that no innovation was possible anymore. Because I was born in a very poor family in France, and we had no central heating and no television and no telephone and no cars. And suddenly, in less than 50 years, we all had a car, television, a telephone. And then I was persuaded this is the end. We can't go further than that. And suddenly, we had the IT revolution. And I think that so much knowledge has been accumulated all over the world, and that one thing is certain, that the rhythm of innovation is accelerating. This is for sure. This is not a prophecy. This is scientific. We know that because of the number of researchers, the number of laboratories, not only in communication, but mostly in medicine, in health, we probably are at the very beginning of a new series of technical and scientific innovation. There will be, if politicians are smart enough, and these innovations will become economic assets. And so my prophecy eventually, that I'm extremely optimistic, because I believe that somewhere in the Chinese, Korean, or US laboratory or French laboratories, I mean, the future is being invented, and this future in 5 years, in 10 years from now, will be a profitable industry and create millions of jobs.
Thank you. Professor Rajan?
I think I have little to add. The only force that is stronger than innovation is politics. And that's what we're going to see develop over the next so many years. There's so much scope for new innovation, especially, as I said, catering to the demands that are now emerging. No longer are we saying how much rich are there in each of these emerging markets. We're saying how many people are there, because we can actually service the whole set with appropriate innovations. And therefore, I think there's no problem of demand in the world economy over the medium term. There is no problem of supply, given the innovations that will come about. We'll deal with the energy problem, with the climate problem. But we have to allow that innovation to emerge. We have to allow the entrepreneurship to emerge. And that's why the political climate is so important. If we lose confidence in our ability to do that, we start creating the walls, if we start creating the regulations that prevent this, I think we will not actually get that innovation.
Thank you. Okay. Do the positive offset the negatives.
As a Chinese, I'm optimistic, and I have keep optimistic. But additional to the innovation and the politics, I would say the world now will very much depend on the emerging market. So that will be the very positive factor. And I believe, at least for the foreseeable future, they will play more positive roles and to contribute to the further growth and stability of the world.
Thank you. Mr. Sung.
As for innovation, I'd like to emphasize the two aspects. First one is the deregulation toward flexible prices. So when we have the entrepreneurs or the new inventions, we should have the a sufficient rate of return for my invention or innovations. And another part is the regulation on the size, in some sense, because the big-sized companies or the too large corporations in that economy might dominate some economy. In that sense, they might prevent some entrepreneurships. So in that sense, I'd like to emphasize the regulation and deregulation also.
Thank you very much. Ladies and gentlemen, you'll agree that the panelists have really contributed fabulously to our understanding of all these major issues. I'd like you to join me in thanking them in the usual manner. Thank you very much.